I'm Priscilla Barrera with the Investing News Network, and here with me today is Jon Hykawy, president of Stormcrow Capital. Jon, thank you so much for joining me today.
Thank you, Priscilla.
So I wanted to start by asking you, we're back at an in-person conference here in Phoenix. How are you finding sentiment from the industry so far? Maybe if you can share some major highlights from the event.
Certainly the sentiment overall from people attending the conference is positive and excited. We understand what the lithium prices have done over the last year, and it's not difficult to find reasons to be excited about that. Whether that's as positive for the industry, I guess we can deal with later, but it's still engendering a lot of excitement around the space. The highlights, I would say, well, I'm not sure if they're highlights for me. It's sort of the continued optimism that we've seen in these conferences for a long period of time. We're going to see continued sales. We're going to see the banning of internal combustion vehicles. We're going to continue to see roses and sunshine across the entire industry, and perhaps that's not quite as realistic, and maybe has never been as realistic as it's been portrayed.
All right, Jon, so let's start talking about the lithium market. What is your short-term outlook for lithium? How do you think the supply and demand dynamics will play out for the rest of 2022?
Well, we saw a very dramatic price increase over the last year, and that was driven, frankly, by just about a perfect storm in the space. We understand, all of us understand at this point, the supply chain disruptions that came with COVID and with the pandemic. What ended up happening, of course, is that there was continued demand for batteries, continued demand for electric vehicles. We saw a dramatic drawdown in stockpiles of some of these chemicals around the world, which couldn't be met by a COVID-disrupted supply chain. And so stockpiles were drawn down, and what we've seen since is not only a buying of materials to provide for immediate production of end products, but we've also seen restocking. So in effect, we've probably seen about 18 or 24 months of buying in about a year. and that had a fairly dramatic effect on prices. I certainly didn't foresee COVID coming. It was not in my list of risk factors, so the shock to pricing is not unexpected as a result, but certainly not foreseen. Again, perhaps not the best thing for our industry because it's viewed as a short-term effect. We probably will see some price amelioration over the next year. Nothing dramatic, but it certainly could happen. And it all comes down to whether we're going to see resurgences in COVID as well.
So as you were saying, we've seen prices trade at higher levels. And so how high do you think prices can go? And you mentioned this might not be good for the industry. Why is that? Can you explain that to our investor audience?
Well, we saw a similar dynamic take place in the rare earth market in 2010, 2011, 2012, where prices went to levels that, frankly, nobody thought they were going to be able to achieve. The reason that happened was we had a reduction in supply. We had a necessity in demand for these critical materials to continue to finish existing designed products, but only up to a point. When the prices hit specific levels, manufacturers started to either try to find material substitutions, replacements for the formulations that they were using that contained rare earths that didn't contain them at all, or they redesigned the product. And so they were required to continue buying rare earths at whatever price up to the level where it became uneconomic to produce the product at all. But after a certain point, they said, I've had enough of this. I'm not going to continue to rely on this material that has a large a fluctuation in cost to me. And what we saw afterwards was a dramatic decline in demand. Now, we're in something of the same dynamic when it comes to lithium. You can't make a lithium battery without lithium. And the alternatives to lithium batteries, frankly, are fairly poor. We all remember nickel metal hydride, NiCad, and all of the rest of it. I don't want to start putting alkaline batteries that I need to throw away in my cell phone. For starters, my cell phone is not going to be the same shape. It's not going to be the same size. But I really don't want to have to rely on that. Yet we're at a point where the prices have gotten uneconomic in some markets. If you look at a large battery going into a battery electric vehicle, we've seen multi-$1,000 increases in value because of the change in predominantly lithium pricing, but also nickel and cobalt. And so the impact of that in an auto industry which is on very tight margins to begin with, is potentially to make some of those models uneconomic as they're priced. Are they going to shut down a factory if they're making a few hundred vehicles and they're selling them for near their cost? No. But are they going to design in as big a battery in the next model and risk having the same thing happen? Not a chance. And what it will happen in the auto industry is those plans next year that an auto company had to bring out 3 new models that are battery electric and build 20,000 each of those might turn into 1 new model and 10,000 units. So we will see reductions in demand from those sources. We will see thrifting. We will see potentially redesigns that work around some of this. Maybe a bigger emphasis on hybrid vehicles or plug-in hybrids, using gasoline as a source of energy rather than relying on lithium and batteries alone.
We've also seen this disconnect between what the major players are saying and how optimistic they are, and the stock market. What are your thoughts on this? Will stocks rebound? Will the disconnect continue?
Well, look, the stock market runs in cycles, and the old adage is the stock market can remain irrational much longer than you can remain solvent. That's never going to go away. The fact of the matter is I'm encouraged more by the continued optimism and the directionality that the automotive OEMs, who are somewhat conspicuous by their absence at this conference, I understand that, but the continued emphasis they're putting on this space and the continued emphasis on growth that is reflected by the majors in the lithium market at this point. It's much more important to understand that for an automaker, converting to an electric vehicle is actually a desirable thing. It's a cheaper product for them to make. It's a reliable product. Consumers want it. Once you try driving these things, you have a hard time going back to a pure internal combustion vehicle, especially at these gas prices. And so it's pretty much at this point an unstoppable trend. How fast we're going to see that transition, I guess, is the question. But at this point, the optimism is warranted, and the stock market eventually will get over whatever it's getting over, and it will come back.
All right. And in recent weeks, what's been, I guess, hitting the industry is this new, or not new, but again, we're talking about oversupply fears here. Is an oversupply coming? Is there a case for it? Or are you more on the structural deficit camp, or how would you define it? What do you expect to see in supply in the next years?
Well, in the immediate future, obviously we're in a situation where there just aren't enough units out there. We're not producing enough lithium to satisfy the latent demand that's out there in the industry. There's a lot of lithium in this world. And so in the past, in critical materials, I've looked at projects and I've said, well, this project is the best project. This one is a close second. And usually we define that by cost. In the lithium sector at this point, with some investor money still being available from knowledgeable investors, frankly, any project that can produce at a profit with a reasonable long-term cost of lithium, and that long-term cost of lithium is probably looking like $15,000 a ton, maybe not 70,000, but 15 to 20 is probably a reasonable, conservative to pessimistic level to examine whether a project is profitable. That's kind of the place that you're looking, and there are a large number of projects that can do that. So it's really a matter now of finding the ones that are furthest down the development chain and bringing those to production.
Let's just talk from an investor perspective then for a second. From a macro view, we're also in a season where we're talking a lot about inflation. There are recession fears. We see interest rates hike. How do you think would this impact the strategy of an investor? Has it changed the way you invest in critical minerals at all? Should they be looking at being more conservative? What are your thoughts?
It hasn't really changed the way that my clients, who tend to be multinationals or large investment funds, look at the space. Yes, absolutely, a recession that hits consumers hard is going to mean that people put off getting rid of an old vehicle and trying to get a new one. That might push off their individual adoption of a plug-in hybrid or battery electric vehicle for a period of time. But you've seen what gasoline prices have done. So there's a counter trend that says, if it's a recession and I'm trying to conserve, is it better for me to replace this old gas guzzler that's costing me a few $100s a month or more with something that I can drive largely on electricity that's going to cost me tens of dollars a month instead? That new payment every month, for a new vehicle could be largely offset by the saving that you have on gasoline at this point. So it's a tough thing to call. It certainly, as I said, hasn't changed the investment outlook for the groups that we work with, because their plans are geared towards the development timeline of a mine. And over a decade, are we entering into a decade-long recession? Well, we haven't had one of those in a very, very long time, so I doubt it. We're going to be back to a point where we're having pretty much unrestricted discussions about adoption of these vehicles and the like, and the continued growth in batteries before that long.
And when looking at lithium companies specifically, what are some things investors should be paying attention to, especially when it comes to exploration or early stages companies? What would you recommend there?
There's a few things that have actually become apparent over the last few years. So when I started looking at this space, I said all things being equal, you wanted to look at brine over hard rock or over clay. The reason being, brine produces. We know there are companies in South America that are producing every day from brine sources, and we know that brine is generally cheaper than hard rock, and clay stones and the like are largely unproven. So there's technological risk coupled to all of that. But what we've seen over the last few years is that the brine producers have been, or the let's say the erstwhile brine producers have been pretty unsuccessful in bringing new material to the market, and the new material has largely come out of projects in Australia that are producing spodumene concentrates that ship to China for conversion. They've managed to make concentrates successfully. The Chinese have been successfully converting those to chemicals for years, so that fit well into the model. I don't think that's going to change. Trying to produce precision chemicals, especially battery-grade chemicals, 3,500 meters up in the high desert in Argentina, is not a simple task. And it's proved to be very, very difficult for the companies that have tried it. I would say at this point, yes, if you can find a really solid brine project, it's probably a worthwhile investment. But I would counsel any group, including financial investors, that are interested in producing lithium to a time scale, rather than just an open-ended, need to be in this space. I would counsel them to be looking at hard rock projects instead, because yes, maybe your recoveries suck. Yes, maybe your costs are higher than you thought, but at least you'd be producing units. And with a brine, that isn't guaranteed.
Then moving away from lithium, I wanted to ask you also about the rare earth market. And maybe if you can just tell our audience what have been some major trends you've seen in the space this year, and what is your outlook in the short term?
It's a very similar thing to what we've seen in the lithium space. So prices have gone much higher in the rare earth space over the last year, 18 months, to the point where the Chinese ministry came out and basically waved a stick and said, okay, it's time to get these things reined in. And that didn't really happen. Price increases stopped, but the prices have remained high, and the simple reason for that is there's a lot of demand out there for these materials. In the specific areas of magnet materials and a couple of specialty rare earths, if you're making lanthanum and cerium, your prices have not looked good over the last while, and yttrium is starting to come down as well. So what I would say there is we expect that demand for magnet materials to continue because it's being driven by the electrification of vehicles. The simplest engineering solution for a drivetrain on an electric vehicle is to use a permanent magnet synchronous motor, and those permanent magnets are made of rare earths. So as that trend continues, I expect the prices to remain high. The Chinese have not, overall state companies or private, have not basically demonstrated any urgent desire to go make more material. They are importing feedstocks now and processing them in China. That will continue. There is a trend towards wanting to open up some projects outside of China, but again, we've done a fairly lousy job, carrying on from the fairly lousy job we did in 2010 and 2011. We've done a fairly lousy, slow job of building the rest of the supply chain necessary to take those rare earth ores out of the ground, concentrate them, turn them into rare earths and oxides, turn them into metals, and finally turn them into end products like magnets. We're going to be reliant on Chinese processing for quite a while longer, and that means that we're going to continue to probably pay high prices for these materials.
That relates to my next question, which was, we've seen some move or announcement, at least from the US, to be able to take back control from some of these metals. Is this enough? And is the US moving in the right direction?
It's a nice desire. There's nothing wrong with a desire to nationalize, to try to build a non-Chinese supply chain for a lot of this stuff. But at the same time, you have to understand how difficult it is. We've been trying to do this from 2010, 2011, and not much has been done. I mean, we've got Linus effectively producing a fair bit of material outside of China. We've got a couple of companies that can metallize rare earths and produce the materials necessary to make magnets. We've got a few small companies. They're not small companies in the sense that the companies themselves are small, but a few small units within larger companies that are making magnets at a high level. What we really need are some advances in the space, rather than relying on the same old technologies and trying to out-China China. That isn't going to work for building a business. So you're looking at technologies, for example, in separation, like some of the things being developed by companies like Ucore, their rapid SX technology. It's solvent extraction, but it's solvent extraction that's been significantly advanced and accelerated. Uses the same reagents, but produces the separated rare earths much more quickly and at a lower cost. That's a worthwhile advantage, especially when you're building new capacity or planning to build new capacity. We need to look at some of the advances in some of the motor technology so that we can stretch those rare earths further. Getting stupidly technical here, but rather than relying on permanent magnet synchronous motors, looking at things like a switched reluctance motor that rely on a smaller magnet, and being able to do that and stretch the material that we have, thrift the material that we have to basically satisfy the need for more automotive companies, more buyers at the end of the day. All of that's worthwhile.
And my last question for you today is basically, when looking at sectors like critical minerals, the battery metal space, what do you expect to happen from now until 2025, just until mid-decade?
My first thought regarding that is you need to examine what an investor shouldn't do is take two data points and draw a straight line between them and extrapolate. Okay, so what we've done to date in this space, I would argue, is not the correct thing. We've in the West have placed a large emphasis on battery electric vehicles, on a need for very large batteries, because once a year we decide to drive for 6 hours somewhere, and we want to be able to make that entire drive without worrying about stopping and recharging the car. What we've ended up with as a result are, well, stupidly uneconomic vehicles with large batteries that consume an awful lot of critical materials without really giving us any corresponding benefit in terms of massive reductions in carbon emissions. The existential problem of our time, to my mind, is climate change. And in order to solve that, we need to, as rapidly as possible, reduce carbon emissions in a way that doesn't damage our economy. So rather than emphasizing a continued reliance on large battery electric vehicles, we should be looking likely at plug-in hybrids and hybrids as a solution. I drive a plug-in hybrid now. I analyzed my driving routes and my driving loop before buying a plug-in hybrid. But I've been very pleased to find that I've probably reduced my gasoline consumption over my typical driving loop by about 70 or 80%. Most days, my little 14 kilowatt hour battery in my vehicle manages to move me back and forth without the gasoline engine ever starting. We can do that for a significant amount of the population in North America. We can do that for a significant amount of the population in Europe. And they can buy those vehicles for no more money, really, than they're paying for an internal combustion vehicle. Because the battery is small, because the gasoline engine is smaller as a result, and because everything becomes more efficient and cheaper to operate. So, in looking at critical materials, I start to look at what the likely outcome is in terms of where the technology is taking and should be taking us, rather than worrying about that direct line path. If we start to move towards things like plug-in hybrid electric vehicles, we can start to envision smaller batteries, yes, but in a lot more vehicles. We'll continue to need lithium. We won't need as much nickel or cobalt because energy density is no longer the primary requirement for those batteries. I don't need to drive 600 kilometers on battery alone because I have a gasoline engine on board. We don't need to build out the grid as rapidly as we would need to. Most people don't understand that if we made a significant conversion to battery electric vehicles, we need to generate a lot more electricity. We need to replace that energy that went into gasoline with electricity, and that means that we will not have enough, which means that not only do we need to augment the grid itself, pull more wires, allow more electricity to be transmitted, buff up and bump up the transformers locally and at substations and everywhere else, but we also need to build more generating assets. And it isn't going to be enough to simply look and say, well, solar will solve the problem or wind will solve the problem. We're going to look to need more baseload generation as well. So on a critical materials basis, as I look forward 5-10 years, I start to look for lithium. I still think we need plenty of lithium. I'm less concerned about nickel and cobalt, although obviously those demands will increase. And the one that I really find interesting, apart from the rare earths for the continued use in magnets in the vehicles and the like, is uranium, because we're going to need baseload generation. We're going to want it to be non-carbon baseload generation. And the most reliable and safest, I'm happy to say, form of baseload generation that fits that bill is nuclear.
Okay, Jon, thank you so much for joining me today.